So we recently got some news from both the Wall Street Journal and Barron's today that doesn't really look too great for Tesla stock, and I want to go ahead and layer that in with why I recently switched my stance on Tesla stock. Now, of course, if you're someone who's watching this, right? You're watching this and you're like, "Look, Justin, I'm bullish on Tesla stock in the long term. Bring it on. I'm ready for the dip." Then by all means, this might be a buying opportunity for you. However, I want to go ahead and point to some things that are a bit concerning. Now, I did touch on some of these in my last video, but if you're new to the channel, consider hitting that like button if you found any value in today's video. And with that said, let's go ahead and just cover a couple of things. Now, recently, I kind of flipped on Tesla, right? I mentioned how there was this high likelihood that with the momentum and hype, we could possibly hit $380, but from there, I will have to reevaluate, as I don't think fundamentally there's anything that could significantly keep us pushing to new all-time highs, and that it's likely to fall down. Well, guess what? We ended up not hitting 380. We are starting to see Tesla stock cool down. We're kind of touching this blue line over here, which is the 50-period exponential moving average. But for those of you guys that are like, "Look, Justin, I don't care about the chart," let's go ahead and get started with what you should probably care about, right? So we had this article from Barron's that said, "You think Tesla sales are weak now? Just wait." Right now, this came out today, and pretty much the gist of the video is just talking about the sales of the vehicles, right? It said how Americans bought 839,000, in the second quarter of 2025, down from 6%, and this is just EVs in general, but for Tesla, sales dropped 13%, right? And so they're saying, look, sales are declining, and pretty much they're likely to continue declining because of, the $7,500 federal EV tax credit that goes away in September, right? And so they argue that most people who are going to buy electric cars, they probably still are going to buy an electric car, whether it be, a Ford or a Tesla, right? I say that because some of the Fords, right? But regardless, they say that those people who are going to be buying those electric vehicles, they're probably going to opt in for a used electric vehicle, just because you could get something significantly cheaper if you just get a used. Now, but this applies to all vehicles. It's not just EV vehicles, right? This applies to even your internal combustion engines, right? You wait a couple of years and depreciation takes its course, and of course you buy a vehicle for much cheaper. But when it comes to EVs, it looks like the depreciation is hitting at a fast pace, and so you could kind of get a 2023 Tesla Model 3 for a relative used for a price that you could probably get for like a Honda, right? And not trying to say Hondas are bad. My daily driver is a Honda, right? And I plan to ride it till the wheels go off, right? Hopefully, fingers crossed, not when I'm on it. But the point is, sales are falling down. Now, what's also interesting is this poll that we got from Wall Street Journal, right? I think this is what's really interesting. This came out today. They said nearly 70% of people said that they believe that the American dream, that if you work hard, you'll get it or get ahead, that it no longer holds true or never did, right? And so this is kind of the highest level of pessimism in the survey in nearly 15 years. Now, I kind of disagree that the American dream never did exist. I think it definitely did, right? Think about the last 2 decades, right? Someone could have been a part-time server at, a restaurant and still achieve the quote-unquote American dream. Now, with the pricing of housing and everything else, it's a bit more challenging, right? Although I still believe it's there. It's just very difficult to obtain these days, right? But the point I'm trying to make, you're like, "Justin, why are you bringing this up?" Well, here's the thing, right? In my last video, I talked about how we were seeing credit card delinquencies up at a pace that we haven't seen since the great financial crisis, right? And what's interesting about this is that is nearly 15 years ago, right? Because again, we're in 2025, 15 years ago. That puts us kind of right around the tail end of the great financial crisis. And so I just thought that survey was pretty interesting. So we have different data points showing, hey, look, Americans are delinquent on their credit card bills, right? at a rate that we haven't seen since the great financial crisis. And then also this poll is just kind of saying that people don't believe in the American dream. So people are in debt. And so this is a big concern because, of course, a majority of Tesla's business still kind of survives off vehicle sales, right? And so if people are, being more frugal, they're not buying the new Teslas. They're maybe buying the used Tesla from someone on Facebook Marketplace, right? That's where a lot of my friends end up buying their cars nowadays, right? No one really goes to the dealership anymore for used cars. But, regardless, that's going to hurt the business for Tesla, right? I know we talk about the energy section of Tesla. We talk about the potential for Robotaxi and Optimus, but it's not there yet, right? It's not there yet. And so again, if you're bullish on Tesla in the long term, you're probably like, look, Justin, let Tesla fall down, right? Let it fall down. I want to buy more shares. I can't wait. And that might be the best option for you. Again, you should always trade in whatever you see value in. Now, I did recently do the free weekly Market Pulse Insight. By the way, it's one of the links in the description down below, where if you sign up every single week, I send out an email about what's going on with the market. And I talked about the seasonality of the market and how, historically speaking, since 1950, the S&P 500 in September had negative returns for a majority of the time period, right? Now, previous price action is not indicative of future performance. We all know that, but it's something to keep in mind, right? There's a lot of factors for why we have the September effect. Again, I broke that down for those that are, within the free weekly Market Pulse Insider email list, right? Which, by the way, you can check out the links in the description. If you're going to check out the links in the description, by the way, let's actually highlight the Labor Day sale to join for $7.60. This is completely separate. This is for the Push and Profit Research Insider Group, right? So the newsletter, completely free. The insider group, right, you could join for $7.60, and you could cancel anytime, right? So definitely take advantage of that. The sale does expire at the end of this week. I extended it to Friday. But going back on, tangent here, right? Delinquencies are picking up. People are feeling like the American dream is gone. And so what does that likely lead to? Possibly less Tesla sales, especially with the EV tax credit heading away, right? So that's just something that we want to be mindful of. Now, this is also part of the Wall Street Journal poll, and I thought this was pretty interesting because, the title of this was "People Like Me Having a Good Chance of Improving Our Standard of Living," and it's just interesting how back in 2000, right, 3 in 4 Americans, they felt like, they had a good shot of doing well in this country. And now here we are where, current year to date or current time period where we currently are, it's slightly above like 1 in 4 people, right? Just interesting, right? It's a bad economic time. And we definitely know that there's this plus of AI that's helping corporate profits, right? We're seeing corporate profits, right? Margins increase. But we're also seeing people kind of get laid off due to AI, and then that kind of bleeds to, people not having jobs and not spending money, making the job market a little bit more competitive. Now, we're going to get some interesting data pretty much Wednesday. We're going to get the Fed Beige Book. A lot of people kind of overlook this. A lot of people pay attention to the CPI report and the FOMC rate decisions, those dates. But you want to also pay attention to the Fed Beige Book because that's when we get a lot of data from the different districts of the Federal Reserve. And I like to kind of parse through those to kind of get a better pulse of the market, or pretty much from the perspective of the Federal Reserve. What do they see going on in the market? So, a lot of data coming out. We also get job data coming out, ADP employment, U.S. employment, etc. So a lot of interesting data, right? Friday is going to be really important to watch. We're going to want to monitor unemployment as well, right? That's also another concern, right? Because this whole whether or not we get the rate cut really depends on two things: inflation and the labor market. And so, we have a lot of data this week that's going to be rolling out that we're going to want to be mindful of. Now, for those that are insiders within the Push and Profit research group, right, we'll go ahead and talk about what, I see as an opportunity for September. But for the purposes of this public video, by the way, if you found any value, make sure to hit that like button, subscribe if you're new to the channel. But we'll have to see. I think Tesla has the potential to possibly bounce above the 50-period exponential moving average, but I don't think that we no longer have that window of opportunity to go back to 380. A bit disappointing. For me personally, again, this is just me. You should always do whatever you see value in. At a position on Tesla, it's exited out. So it's cash right now, and I'm going to be talking about, for those that are insiders, where I'm going to be going and kind of moving that cash to. But ultimately, we're going to really want to monitor Tesla this week. Do we break below? Well, if we do, well, then that's where we get some more red flags, because we get this pocket of volume over here, low volume nodes, and we could easily fall down through that pocket of volume like we did in March. So definitely something we want to be mindful of. But with that said, again, before you guys go, make sure to hit that like button and check out this video right over here. I kind of break down what are some things I look at from a technical perspective to get into a position. But with that said, I'll see you guys on that next video. Take care, guys.